Here is a hot coin that we have been making very good gains on, and more importantly using the margin technique that we use to guarantee 500% more profits than you would normally get without, right? And what I want to show you here, guys, for all you guys in the VC Trading Academy, for everyone who went to and signed up at linktree.com/venture capitalist, we'll leave a link in the comments. I want you to show something here. We've been studying on the small caps that seem to be really powerful, and you can try this with any other coin and just updating, right? So a lot of times when you first start off in the program, we're always updating our indicators, changing settings, making sure that they're changing with the times, and that you guys are getting your most success. So what I'm going to teach you guys here is very simple, right? You're going to use a 30-minute time frame, okay? Now, the reason why we use the 30-minute time frame is because the moves are a lot bigger, which means your profits are better, right? So the higher the cost of the coin, a lot of times you want to use the higher time frames to get into these trades, right? So 30-minute is the minimal that you want to use, right? And we're going to use our main indicator here, which goes from red to green, and this is the one you also set your alerts on, right? So this is the one that sends you an email. The email goes to your cell phone. Your cell phone lets you know that you have a email from TradingView that you should come buy or sell the coin that you're watching, right? And this is price action, right? And when price action starts to happen way before our volume, right? Because you guys have previously been taught that you wait for this to go price action green and then volume green, right? And that was just to discipline you to where you kind of like understand you have to be patient. If you're watching your coins and you're going for your simplicity, we've updated these indicators to be a little more better, right? So what happens here is this is a 30-minute time frame, meaning each of these candles are 30 minutes. So what happens is right here, when we get the opportunity to have our price action go from red to green, this candle basically operates in a 30-minute session, right? So you get an email saying, oh, you went green somewhere in here. It doesn't matter where it is. And you have like 15 minutes, 30 minutes later, and this next candle comes in. This is where you would enter, right? And this is why you see this line right here is set up to enter on this next candle, because once this candle's finished, you're going to enter on the 30-minute candle, meaning that at 5:30 or 6 o'clock or 6:30, candles are every 30 minutes starting on the hour, right? You would enter on this next candle, right? Now, with the volume being on the positive side, right, doesn't have to be green, just has to be on the positive side. That means we look down and say, okay, this is an enter, right? We're positive here, right? So we jump in, right? And this move right here, remember, we're using the 500% more. This turns in, we enter at this level here, right? And as this starts to move up, as we go here, we can see that, always remember when you put your stop loss, right? Your stop loss is basically put on the bottom of the candle that first triggered, right? So that's your stop loss right there. Then you would enter here at this candle here. Now as this starts to go up, once we hit the margin of 1% gains, right, which would come somewhere in this level here, would be 1% gains. What we would do is then move our stop loss to our entry position, meaning that we're not going to lose any additional funds on this. We're only going to lose the cost of doing business, meaning the fees that it costs to actually trade, right? And those are based on how much you're putting in, etc., right? So now our stop loss is at the entry life, because this is at 1%. When this becomes 1.5%, right? You see it right here, it becomes 1.5%. You start to see that you're getting a move here, and what you would do is when it hits that 1.5 and 2% mark, this is where you would have came in and moved your stop loss up to 1%, right? Meaning in this area here. Now, it starts to spike up, and you know that every time it spikes up, your job is to move your stop loss, right? Or when you first set your trade up, you would have set your trade and said, hey, what's my 2% win, right? And you would have been like, So when this coin gets to this number right here, 0.017, you would have put in a stop market to take full profits at that time, right? So that way you don't even have to watch the coin. You can move on with your life once you set your stop loss to your entry point. And that would have triggered here and you would have got your 2% gain. And remember, that's times 5, right? So that 2% is actually 10% profits is what we're looking for, and that would have hit. Now, if you had been watching this trade, you would have been moving your stop loss. And this, as this hit the 3 mark, the 4 mark, you would have then been at a 3% stop loss, and that would have triggered and you would have made 3% on that move, right? Now, what I want to show you is you're entering on the green, and as long as this is positive, like above the north side of our half, meaning the positive side, then we're a go, right? Now let's move to the next section where our price action trend goes green, right? Now these I consider, when it's a 4% or 2% win, I consider those like losses, because honestly they're so little that a lot of times we're going to break even. Because here you would be moving your stop loss probably to 1% when it hits 2%, and then it comes down, and the 1%'s okay, because that just means we made a 1% move, but that's only 5% on our money. Now our goal is to make 10% per trade, right? So to me this is considered a loss, even though we would have entered here. And this is an example here, even with the trend line being negative here, right? This is what I'm talking about. When the trend line isn't on the positive side, then you would avoid that entry, right? Now a lot of guys, what they're doing is they're just using off our price action trend move, and when the price action turns green, they're jumping in. And this would have been a 2% move, and you would have got 1%, because this isn't positive, it's on the negative side. This is why it's not worth entering this trade, because it's not on the positive side. So you would bypass that trade, okay? Just so you know. Now, as we come across, we're waiting once again to go green. Now this actually turns green, and right here on this candle we get the alert, and you see right here how the volume has moved up to basically showing you that it's going to go positive. The entry point would have been in this zone here, which would be basically the same candle you would have entered anyways, right here. And this was a nice little short 2% move. Now that's something we would actually got into, because you were showing volume going over to the positive side. But once again, that 2%, even though we would have got at least half of that, which is 1% times 5, which is 5%, it covers the cost of the trade, etc., etc. But to me, that's a loss, right? I consider that like a loss. So this is where I say that we win 8 out of 10 trades. We're 80% to 90% all the time, right? Is because we didn't really lose here, so it's not a loss. But to me, it's not a win, because we took time to make this trade. We had time to set it up. We put a stop loss, etc. And quite frankly, if you did your stop losses properly in your stop markets, you would have took profits at 2%, which would have been your 10% win. But that's not, that's just grinding, right? So grinding to me is kind of like, breaking even is not, grinding. Getting our 10% is a win, but to me it's not like what we really come for. You know what I'm saying? We want those extra wins, right? Like this. So we play those 2 moves, right? And we kind of break even, or we make our 10% on one of them, we make 5% on the other. Then all of a sudden we're positive on our volume, and then boom, our trend turns green. We get an alert to our email, right? Email that you have hooked up for TradingView will get an alert when you set it up. That alert will then go to your email, and as long as on your phone you have your alert set for your email, create a folder, call it TradingView, and then put all the alerts, filter them into that one folder. So then when they go to that folder, you have your alerts set up, and all of a sudden your phone goes ding, and you look and you say, oh shit, I need to go buy One Earth. And then right here, 30 minutes goes by, you get in at this channel right here. And what that means is that would have ran up to our 7% profits, right? And at that point, you would have been basically, if you would have set your stop market at 2%, easy win. If you would have basically set your stop loss at the bottom of this candle here, and then checked on this every 15 minutes or 30 minutes to see where your coin is, you would have noticed that at this point you were moving up to 5%, 6%, and you would have moved your stop loss up 1% below the current move, right? So when it got up into this position 7%, your stop loss should have been 5 or 6. So no matter what, you should have stop lossed out at 6%, which is what we show down here. And that right there, that to me is where we consider that like a normal win for us, because that's 6 times 5, which is 30%. So that's a 30% gain right there. Very nice to have. And then let's move along. Let's find another time. Now all we do is we wait for it to go red again. We don't get back in that trade. We let it go red, and let me cover that a little bit more though. Okay, so when we let's say right here we stop lossed out at 6%, right? And you say, well, I like to get back in on these trades. Well, what you need to do to get back in on this trade is you need for this to come down. You need for it to regather, and then it has to bounce, right? So when it comes down, it goes yellow, and you're like, all right, I got a little green here, which might make you want to jump back in because you think it's going to volume. But you can see it's plateaued here, right? And another thing you need to do, the reason why we use the 10 moving average is because you see the candles are below the 10 moving average, which basically lets you know that it's on a downtrend, okay? The 10 moving average means if it's below, it's down. If it's above, it means it's up. And because it's below the 10 moving average, we stay out of this trade, and luckily we do, because boom, it goes down, and then all of a sudden it turns red, and then it has this huge plunge, which we're not in because we took our profits at 5, and this goes all the way down, and then now we're waiting is for another email alert, which happens right here. We get an email alert, we can see our volume is here, and then what happens on this next candle when we go to get in, that volume gets cut in half. Now it isn't positive, but it was a huge shift from where it was. It wasn't like a little move where it was popping down. It shifted like literally half the size. So we can look at that and go, okay, there's some buying going on here. So we would be entering on this candle. And as you can see, this is this section here. This is our entry. And then that lets us know what our target is, which ended up being 14% on that move, right? So we got a nice little, what they call a pump to 14%. And if you're watching that, if you're setting your stop market at 2%, you would have made your 2%, which is the 10% you want to make. And that's another win for you in your column. Because remember, the goal is to do 10 trades every 14 days that give you the 10%. And this would have been one of them. Now, if you were setting your stop loss when you entered on this candle at this candle, and then on the next candle when it came in here, it started to move, and then you moved your stop loss up, right? So because you're supposed to keep your stop loss 1% behind. So as this starts to move, and let's say you're a little bit behind, let's say you go 2%, because once it goes past 2%, which is what you really want to make, you can allow it a 2% window, meaning the stop loss is always 2% behind as it grows. So if it does pull back, you're still in the move until it ends, which means it's stop losses. So at this point, when it hits this 7% right here, or 14%, your stop loss should have been either 12 or 10%, somewhere in here. And then what would have happened was it would have stop lossed out again, and this would have been a 10% gain for you, right? Now remember that 10% gain is times 5. So this was a 50% win here, guys. 50% win by simply using a simple move. Now, let me show you what I'm talking about here. We are in green. It pulls back, and you're like, well, yo, VC, how do I get back in this trade? Well, you're going to let it go negative because you only have a trend. You have price trend right here telling you to buy, and that trade has ended, right? So the next thing for you to actually get in would be somewhere in here where you were looking for the volume to change, which it came back, it retested, and then started going a run. Now, experienced traders would have let the pullback come back, and a lot of times after a push, there's a pullback, and if everything is still good, like, see, now notice the difference here, right? Here's the difference. It's below the 10 moving average, right? And then it breaks above the 10 moving average, right? So you see that right there? You see right here how it breaks above the 10 moving average right here? Experienced traders would have said, well, I'm green and my volume is actually picking up and I broke above the 10 moving average on the 30, and that's an experienced trader down the road that you could re-enter on this trade when it breaks here, and then you could have ran this up for another 14% gain or 10%, right? So as you go along and get better at it, there's maximum opportunity here to get better and make more money. But honestly, by using the system that I created and the strategy that I teach you guys, one good trade, using your trend, your price action, you're making the money that you want to make gradually, right? This is a 6-month program to take 1,000 to 100,000 or to take 100 to 25,000. There's no rush here, guys. Be patient. You will learn these extra techniques as you go forward. But yeah, once it breaks above the 10 moving average, you could have took a risk again, got in on this bottom candle, stop loss here, and then you could have rode this back up. Okay, that's your 10 moving average. You let it break the 10 moving average, you enter on this next candle, stop loss on this candle that was prior, and that's it. Now, moving forward, that does its routine. It comes back down. Here we go. Price action once again turns green, and we are positive, right? See the negative movement, and then we went up more than half. We shifted. So we enter here on our price action at green, not this candle, but this candle, and we follow it up. It ends up going 4%. We would have stop lost at maybe 3 or 2%, but that's another win for you. Once again, strategy is winning. Pay attention. 10 trades to double your money. You just doubled your money that quickly, right? You just doubled it. So if you had 1,000, you now have 2,000. Get it? And now you're about to take that 2,000 and double it again. You're about to make 4. Now to me, this is another trade that you can avoid by saying, okay, I got a price action that goes green. It's above the 10 moving average. All this looks good, except down here, notice how the volume turns here when it goes green, but it stays literally the same, right? There's no massive half a jump. It didn't get half as big. It didn't move as much as it should. So that shows me there's really no buying going on there. There's some type of transactions that are happening. And the price action is changing, but there's not a lot of push here. So when you see these little bitty volumes where it's not giving you at least half of the last candle, which would be a half decent size, I would avoid that trade. That's something I'd go, I'm not seeing a lot of things here. I'm going to wait, right? And you wait it out, you keep going, and then all of a sudden volume starts picking up again. You're like, all right, there's shit happening. There's people actually selling, and that's when I'm going to see the difference. Price action comes along. What do we see? Price alert. You get an email saying, hey, you got price action happening here. Turn green. This candle, boom, 30 minutes. You have 30 minutes to get in. You come and look at it, and you notice that, oh man, this next candle, I'm in the positive here. This is a great trade, right? And this is what I'm saying. Sometimes you can avoid those other trades, even though they were green and there was a 14% or 10% win in there. You could actually miss that trade by being more disciplined, right? More disciplined, right? Taking less chances, right? And if you're the type of person that wants to take less chances, then you wait for these volumes to be in the positive, right? Positive, jumped up more than half, positive, and all of a sudden you're like, yo, this is big movement here. Turns green, you enter on this candle, stop loss on this candle, right? Now you track this candle. What does it give you? 15% gains, and then you have a stop loss at what? 10%, right? It breaks down, it hits it. Boom, 10% gains times 5 is what? 50%. So now your 2,000 just made you 1,000. Now you're up $1,000, right? And this is already going into the next week. As you move across, you're waiting for your price action to let you know that you need to get in again. What happens? Price action turns green. You look here, see the volume, and see how much it's moving towards the up. So that means like when I see this candle and I see this go more than almost half of this candle, but there's like a good amount of volume, I'm going to take this because I'm entering here with the stop loss here. Okay, so I enter here, it runs, I get 7%. Let's say I move my stop loss to 5%, but either way, I end up with 5 times 5. That's 25% on $3,000, right? Remember, we're compounding. We move along, we wait, all of a sudden, price action changes again, and we see right here that there's some volume happening. It's not like tiny, it's like big volume, big sales, decent, little more, half of that, little push, and I'm like, okay, so now all of a sudden this turns green in this candle, and I see this positive push here. I enter on this candle, right? Boom, 9% gain on a spike, and I probably get half of that. So let's say 5%, which isn't bad. It's another 25% gain, guys. This is how the game is played. This is how to use your indicators. You know, Then we do the same thing. We wait for it to reset, turns red, turns green, and what do? We look down and go, oh, our volume's in the positive, turn green here. We buy in this candle. What do? We spike for 13%. Let's say we get half of that, 7, right? 7 times 5, 35% of 3,000. You're not happy with that? Let's go, right? Now we're building money. We're almost to 4 grand, right? Now here, price action goes green. You could have made 2%. This is what I'm trying to show you, is that these indicators are so sensitive that even when the market is terrible with volume, they still score 2%. Times 5 is what? 10%. It's winning. It's winning. But this is not a win to me. Even though it hits my target, even though you make 10%, even though that is profitable, it's not a win to me because it didn't have more opportunity. Which means if you guys fail to put your stop loss correct, or if you fail to put your take profit at stop market at 2%, then you might break even on this. And quite frankly, look down here. You see the volume, it clicks here. That's not a lot and it's not positive. So honestly, you can skip that trade even though it won. And now, this is the only time, this is a fake out. Now to me, this is where the indicators turn green, right? You get in here, volume looks really good. You buy in, and then this breaks back down, and this is a trade we consider a loss because more than likely you guys are going to get hit on your stop loss slightly below 1% below where you entered, and to me that's a loss, okay? So that's a 5% loss, okay? That does happen. Nobody's perfect, guys. Even though we just went literally 10 out of 10. Nobody's perfect. This will happen every once in a while, okay? Don't be distraught. You did everything right. Volume was there. It just fell short, right? That happens. But I wanted to show you how often it actually happens so that you can be like, oh, you know what? No big deal. 10 trades, 15 days, double your money. Here we go again. Price action turns green. Volume, half of volume, right? Turns green. Next is half of that half. So I'm entering here because I'm seeing movement, and bada boom. You don't even have to get in here if you look at this and go, I don't even like this. You can skip this 4.5%. You don't need that. You can skip that. You can wait. You can go along, and what you can wait on here is like, I'm going to wait until the volume gets bigger. And then you can say right here, you can see this big spike in volume, which is this coin here. And you could have been like, you know what? I'm jumping in here. And guess what? If you would have done that, and seen this volume spike, right, or any of these volumes, right, you could have been like, you know what, I don't like this volume, and then when it started spiking here, you could have got in on this profit here. Either way, you still would have made that 4.5%, right, by being patient, waiting for volume, or you could have just ignored it and be like, I'm going to let it run its cycle. When it's done with its cycle and goes back to what I like, which is red to green, I'm safer that way. Better opportunities, be patient. What would have happened? Red to green, volume changes way more than half. You enter here, guess what? Boom. Easy 6% and possibly even more if you were sitting watching it grow and you notice it's staying above the 10 moving average and you're like, you know what, I'm going to ride this out. I'm going to put my stop loss at my 2% mark and I'm going to see where this goes. And I'm not going to change it until it spikes to a level that is just where I want to be. So let's say we enter on this candle and we ride this out and this spikes to 2% and you put your stop loss, right? Which has been somewhere in here, right? And all of a sudden this spikes up to here and you're like, oh, 6%, but you keep it at a 2% stop loss, comes back down, plays out, and then it re-spikes again. And this time when it hits 7%, you move your stop loss up to 5%. And you're like, boom, and then this would have been a 5% gain for you, right? No matter what, even if you took a 2% gain, that's exactly what you came to do. Same thing here. Turns price action goes green, right? What happens? Price action green, you enter here, 4% gain, or you take half of that. You set your stop market at 2%, take your profit, and you move on, right? We're just doing 10 trades every 15 days to double our money. $1,000 will make $100K. $100 will make 25 to 50K, guys. Real simple, man. Here we go. 2% positive. Everything's good. Spikes up. 2% gain, right? I consider that, you know, another fake out. That's one that I'm like, I'm not too considerate about that, don't really care. Happens here again, 3%, another fake out. This is a tough market, but either way, we would have made our 1% or at least our 2% here and been like, at least I made my 10%. And then you're moving along. Not thrilling wins, but they're wins that add up because we're chipping at the boulder, and all of a sudden we get in these positions, and what do we see? Here's a buy-in here. We would have got in here, and this trade right here is what? This trade went ballistic. 86%. Okay? That's 500% gains. That means your $1,000, your $2,000, your $3,000 would have been what? Times 5. That's $15,000 on this one spike for you playing the game. And this will happen if you play the game and you run out every couple months. You will have a day where this 86% jumps and you take home 400%. And it's going to be when you're trading $3,000, $4,000, $5,000, and you're going to walk out with 15 grand in a day. And that will happen for you at least 5 times a year, right? So think about that. 15,000 times 5. That's 75 grand on spikes that you will take home. And I'm not even putting these in the equation of the system that I designed. The system that I designed was to help you go from 1,000 to 100 grand by collecting 2% wins 10 times out of 15 days. Okay? This is why you need to get excited and you need to listen to what I'm telling you. You need to follow the system, right? 1,000 to 100 grand. It doesn't even account for the extra 100 or 75,000 you're going to make when there's super spikes. Okay? Get excited. The system works. I show you over and over and over. Okay, guys? So that's how you use the system. I'm going to make more videos like this, and I'm going to teach you how to scale out so you can start looking at charts, learning how to figure out where to make money or how it makes money to make you a better trader, all right? Other than that, it's your boy VC. Good luck. God bless. Wish you guys the